November 1910, a train station in Hoboken, New Jersey. A single private railroad car waits in the darkness. One by one, a small group of men arrive, not as a group, but separately, slipping through the shadows. They are forbidden from speaking to one another. They use only their first names. They are, we are told, on a secret duck hunting trip. But these men are not duck hunters. They are the architects of the 20th century. They represent a concentration of wealth so vast, it is almost impossible to comprehend. They are lieutenants of the great houses of Morgan, Rockefeller, and Rothschild. They are the most powerful bankers, politicians, and financiers on earth. Their leader is Senator Nelson Aldrich, a Republican insider, a financial titan, and the father-in-law of John D. Rockefeller Jr. With him is Paul Warburg, a German immigrant, a partner in Kuhn, Loeb and Company, and the intellectual emissary of the Rothschild banking dynasty. There is Frank Vanderlip, president of the National City Bank of New York, the largest bank in America, the financial arm of the Rockefeller Empire. There is Henry Davison, a senior partner at J.P. Morgan and Company. And Benjamin Strong, another Morgan lieutenant, the man who would become the architect of the system. These 6 men in the sealed train car represent an estimated 1/4 of the entire world's wealth. Their journey is 1,000 miles south to a private, exclusive island off the coast of Georgia, an island owned by J.P. Morgan himself, an island called Jekyll Island. For 9 days, these men would meet in total, absolute secrecy. Their identities, their location, and the purpose of their meeting were a closely guarded secret for decades. The official story of this period is one of chaos. The American economy was unstable. It was rocked by a series of devastating financial panics. The Panic of 1893, the Panic of 1907. The textbooks tell us the Panic of 1907 was the trigger. It was chaos in the streets, bank runs, the failure of the Knickerbocker Trust. The entire system was on the brink of collapse. And then one man, J.P. Morgan, stepped in to save the day. He gathered the other bankers in his grand library, locked the doors, and forced them to pool their money to stop the contagion. Morgan, the story goes, acted as a one-man central bank. The public, we are told, was terrified. They demanded a solution. They demanded stability. They demanded a lender of last resort to prevent these panics from ever happening again. The government, in response, created the National Monetary Commission, led by Senator Nelson Aldrich. Aldrich, the official story says, toured Europe for 2 years, studying the great central banks of England, France, and Germany. He returned with a plan, the Aldrich Plan, to create an American central bank. But the public was suspicious. The American people, with their populist Jeffersonian distrust of centralized power, hated the idea. They knew exactly who a central bank would serve. They saw it for what it was, a money trust, a cartel. The plan was a political failure. This is the official story, and like most official stories, it is a carefully crafted lie, a fabrication designed to hide a much darker truth. The Panic of 1907 was not a failure of the system that the bankers wanted to fix. It was a success. For J.P. Morgan, the panic was a tool. It was a fire he allowed to burn, a fire he may have even started to achieve one goal: consolidation. During the chaos, Morgan's competitors, the smaller trust banks, were wiped out. The Knickerbocker Trust was annihilated. J.P. Morgan and his allies were able to buy up their rivals' assets, banks, railroads, and steel companies, for pennies on the dollar. The panic was not a disaster for the money trust. It was a weapon. But it was a clumsy weapon. It was risky. It forced Morgan to use his own capital to stop the fire he'd created. The money trust, the allied houses of Morgan and Rockefeller, had a much deeper problem. Their dominance was being threatened. New wealth from the industrial heartland was rising. New trust banks were competing with their old, established national banks. The old system, the National Banking Act, was too restrictive. They couldn't create enough credit out of thin air to finance their global ambitions. They needed a new system. They needed a mechanism that would do 3 things: eliminate their competition, the smaller independent banks, allow them to profit from infinite government debt, and most importantly, create a lender of last resort that they controlled, one that could backstop their losses, not with their money, but with the public's money. They needed to capture the United States government itself. The failed Aldrich Plan taught them a valuable lesson. They could not appear to be in charge. The American public would never accept a Bank of the United States run by J.P. Morgan. The heist had to be subtle. It had to be a deception. And so they gathered in secret, on Jekyll Island, not as hunters, but as conspirators. Their goal was not to stabilize the economy for the public. Their goal was to institutionalize their power, to legalize their cartel, to build a machine that would give them a permanent, total monopoly over the one thing that matters: the money itself. They were not drafting a public policy. They were drafting the Articles of Incorporation for a cartel. The man with the plan was Paul Warburg. Warburg, steeped in the European tradition of central banking, understood what the money trust needed. He knew that the problem was the name. He proposed a brilliant deception. You don't call it a central bank, you hide it. You create a regional system, a decentralized system. You create not one central bank, but 12. You place them in cities across America: Boston, Philadelphia, Chicago, St. Louis. This would, in theory, appeal to the populists. It would look like you were breaking up the money trust in New York. It was a lie. The real power, Warburg argued, would be concentrated in the Federal Reserve Bank of New York. The other 11 branches would be mere satellites. But the true genius of the deception, the core of the 1913 heist, was not the regional structure. It was the question of ownership. Who would own these new, powerful regional banks? The answer, drafted in that secret meeting, was simple. The Federal Reserve banks would not be government agencies. They would be private corporations. Their stock would be owned by law, by the very member banks they were created to regulate. Think about what this means. It is a system where the fox is not just guarding the henhouse. It is a system where the foxes built the henhouse, owned the henhouse, and gave themselves the only key. The banks of J.P. Morgan, Rockefeller, and their allies would, by law, become the private owners of the new Federal Reserve. They would have the power to create money from nothing. They would have the power to set interest rates. They would have the power to decide which banks would live and which banks would die. And they would have the full, explicit backing, the official stamp of the United States government. This was the Jekyll Island secret, a plan to legalize a private banking cartel and give it the power to print the nation's money. Now, they just had to sell it. The Jekyll Island plan was a blueprint for the perfect financial weapon. But it was still just a plan, a secret document written by 6 men in a smoke-filled room. How do you take a conspiracy and turn it into law? You need a new face. You need a patsy. The Aldrich plan was politically toxic. It was branded as the banker's plan. The conspirators needed a Democrat to sell their Republican idea. The 1912 election was the key. The Republican Party was split. The cartel's inside man, Senator Nelson Aldrich, was not running. The incumbent, William Howard Taft, was unpopular. The money trust, with its infinite resources, saw an opportunity. They found a charismatic, fiery populist, Teddy Roosevelt. They financed his Bull Moose party, knowing he had no chance of winning. Why? To split the Republican vote, ensuring that their hand-picked Democrat, a stiff, academic, and pliable man named Woodrow Wilson, would win the presidency. Woodrow Wilson was an idealist, which made him the perfect puppet. He was surrounded, advised, and managed by a man named Colonel Edward Mandell House. Colonel House was not a military man. He was a political operator, the fixer. He was the handler for the international banking interests. In his own private writings, House dreamed of a world order controlled by a small group of enlightened elites. He was the perfect man to deliver the Jekyll Island plan to the new president. The Money Trust took their Aldrich plan and simply changed the name. It was repackaged as the Glass-Owen Bill or the Federal Reserve Act. They put a new public face on it. A Federal Reserve Board of governors would be appointed by the president and approved by the Senate. They would sit in Washington, D.C., giving the illusion of public control. This was the brilliant deception. The public face, the Board of Governors, would be a political shield. The real power, the power to create money, the power to buy and sell government debt, the power to set interest rates, would not be held by the public board. It would be held by the Federal Open Market Committee, or FOMC. And who would sit on the FOMC? The presidents of the 12 regional banks, the private corporations owned by the bankers themselves. The New York Federal Reserve Bank, the arm of the Morgan Rockefeller interests, would have a permanent seat at that table. The bankers had won. They had created a system where they controlled the substance and left the politicians to argue over the shadows. Now, all they had to do was pass the law. They waited. They were patient. They waited until December 23rd, 1913. 2 days before Christmas, Congress was almost empty. Most of the members, the ones who would have fought the bill, had already gone home for the holidays. In a hurried, near-empty session with no debate, the Federal Reserve Act was pushed to a vote. Woodrow Wilson, the populist Democrat, signed the Jekyll Island plan into law. The cartel was no longer a secret. It was now officially the law of the land. Woodrow Wilson would later write, in 1919, in a moment of terrible clarity, quote, "I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all our activities are in the hands of a few men." The heist was complete. But what exactly did this mechanism do? Why was it so powerful? It gave the cartel 2 magic powers. The first power was the lender of last resort. Well, this sounds like a public good. But what it means is that the big banks, the member banks, could now take insane risks. They could gamble with their depositors' money. And if their bets went bad, the Federal Reserve, their own creation, would be there to bail them out, printing new money to cover their losses. The second and more powerful magic was the monetization of debt. Before 1913, if the government wanted to spend money it didn't have, it had to beg the public to buy bonds, or it had to beg the big bankers like J.P. Morgan. The bankers, in turn, could say no. After 1913, and that check on government power was gone. Now the mechanism was simple. Step 1, the government wants to spend $1 billion it doesn't have. It prints a bond, an IOU. Step 2, the Federal Reserve creates $1 billion out of thin air, digital, electronic, and buys the bond from the government. Step 3, the government gets its $1 billion to spend. But what did the Fed get? It gets an asset on its books, the government's IOU. And who gets the profit? The Federal Reserve pays a 6% annual dividend by law to its private owners, the member banks. But the real profit is in the inflation. The new $1 billion that was created from nothing now floods into the economy. This is inflation. This is a hidden tax. It is a silent, invisible theft of your purchasing power. Every dollar in your savings account just became a little more worthless. The Jekyll Island plan wasn't just a bank. It was a machine for creating infinite government debt, and a machine for privatizing the profits, while socializing the losses in the form of inflation onto the public. This machine, this creature from Jekyll Island, was born in December 1913, and it did not have to wait long for its first great test. Less than 8 months later, in August 1914, the guns of August fired. The Great War had begun. This, the bankers realized, was the true purpose of their new machine. World War I was the first blood for the new Federal Reserve. It was the test that proved the Jekyll Island mechanism was the most powerful weapon ever created. Before 1913, a war was financially limited. A nation could only fight as long as it had gold in its vaults, or as long as it could tax its citizens. The Great War was the first unlimited war, financed by the new, unlimited magic of central banking. The moment war broke out, the J.P. Morgan Bank was named the sole purchasing agent for both Great Britain and France. Every bullet, every boot, every shell, every loaf of bread was financed by the House of Morgan. But where did Morgan get the money? He was no longer just a banker. He was now a partner in the Federal Reserve. The mechanism was put into action. The U.S. government, led by Woodrow Wilson, wanted to support the Allies. The government issued Liberty bonds to the public. The Federal Reserve, now run by J.P. Morgan's man Benjamin Strong, urged Americans to do their patriotic duty, to borrow money to buy these bonds. And the Fed itself began buying the government's debt, printing the money from nothing to finance the war. The war lasted for 4 years. It cost the United States over $30 billion, an incomprehensible sum at the time. And the Federal Reserve, the cartel, was at the center of it all. The bankers made commissions on every bond sold. They earned interest on the debt, paid for by the taxpayers. Their own industrial companies, U.S. Steel, DuPont, Remington, received the contracts to build the weapons, financed by the new money their own bank was creating. It was the perfect closed loop of profit. By the end of the war, in 1919, the United States was no longer a debtor nation. It was the world's great creditor, and the houses of Morgan and Rockefeller, they were the ones who held the markers. The cartel had tasted real power. Now they would learn to use it. The 1920s, the Roaring Twenties. The official story is one of a post-war boom, a new era of prosperity. Jazz, flappers, and a stock market that only went up. This was a lie. The boom was not real. It was an illusion. It was the first great bubble engineered, inflated, and controlled by the Federal Reserve. Benjamin Strong, the governor of the New York Fed and the cartel's man on the inside, famously said he would give a little coup de whiskey to the stock market. He put a foot on the gas. The Fed expanded the money supply. It lowered interest rates. It pumped billions of dollars of new, easy credit into the economy. This easy money had to go somewhere. It went straight into the stock market. Margin lending exploded. You could buy $100 of stock with only $10 down, and the easy credit from the Fed covered the rest. The bubble grew to grotesque proportions. It was a mania. Everyone was a genius. The public, the little guy, was lured into the casino, and the insiders, the Jekyll Island men, they watched and they waited, because they knew the mechanism that could inflate the bubble was the same mechanism that could pop it. In 1928, the cartel decided the time was right. Paul Warburg, the architect himself, issued a warning that the market was dangerously overinflated. The insiders quietly began to sell. They got out at the top. And then the Federal Reserve put a foot on the brake. They contracted the money supply. They raised interest rates. They cut off the easy credit that was propping up the entire house of cards. October 1929, Black Thursday. The bubble popped. The system collapsed. The official story is that this was an accident, a failure of capitalism, a panic that the Fed didn't know how to stop. This is the greatest lie of the 20th century. The 1929 crash was not an accident. The Great Depression was not a failure. It was a harvest. It was a calculated, engineered demolition of the American middle class. The economist Milton Friedman, no friend of conspiracy, would later prove in his Monetary History of the United States that the Federal Reserve was solely responsible. But he missed the motive. Why would the cartel do this? Why would they burn down the economy they controlled? The answer is the same as the Panic of 1907: consolidation. When the crash hit, who got wiped out? The little guy, the public trading on margin, and more importantly, the competition. The Federal Reserve, in the 3 years after the crash, from 1930 to 1933, stood by and watched as 1/3 of all banks in the United States failed. But they were not member banks. They were the little guys, the independent rural state banks, the cartel's competition. The Fed, the lender of last resort, refused to lend. It let them die. It contracted the money supply, ensuring the depression would be great. And while the public was in the breadlines, while farmers were losing their land, the Jekyll Island men, the insiders who had sold at the top, they now came back. They came back with billions in cash, and they bought America. For pennies on the dollar, they bought the railroads, they bought the steel mills, they bought the land, they bought the failed banks. The Jekyll Island plan was a weapon. The Great Depression was the proof. The cartel had succeeded beyond their wildest dreams in eliminating their competition and consolidating their control. They had captured the nation's money in 1913. In 1933, they captured the nation's assets. And now, with the public broken, desperate, and begging for a solution, the cartel would move to the next phase of the plan. A New Deal that would consolidate political power in Washington, and a new global system that would export the Jekyll Island mechanism to the entire planet. The heist was about to go global. The Great Depression, the engineered collapse, did exactly what the cartel had planned. It terrified the public, destroyed their faith in the free market, and made them beg for a savior. That savior was Franklin D. Roosevelt. The solution was the New Deal. The official story is that the New Deal was a war on the bankers. This is a political fiction. The New Deal was the consolidation of the bankers' power. FDR's first act, a bank holiday. He seized the nation's private gold, making it illegal for citizens to own it. He devalued the dollar overnight. He created a raft of new federal agencies, all of which were financed by new debt, sold to the Federal Reserve. The Jekyll Island machine was now funding the total reorganization of American society. The cartel was no longer just the lender of last resort. It was now the owner of last resort. This new, centralized system was then put to its greatest test, World War II. Just like in 1917, the instant war was declared. The Federal Reserve's mechanism was turned on. The cartel printed billions upon billions of dollars to finance the war, cementing its partnership with the military-industrial complex and the centralized government in Washington. By 1944, the war was won. America was the only superpower left standing. It held almost all of the world's gold. And the Jekyll Island architect, their heirs, saw the ultimate opportunity. It was time to export their machine to the entire planet. Bretton Woods, New Hampshire, 1944. The official story is that the world's allied nations gathered to create a stable post-war economy. The real story is that the Jekyll Island cartel consolidated its final victory. They made the US dollar a currency controlled by their private bank, the Federal Reserve, the global reserve currency. The heist of 1913 was now a global heist. Every nation on earth was now chained to the cartel's printing press. This system was stable for a while, until the cartel got greedy. In the 1960s, they used their machine to print trillions to finance the Great Society and the Vietnam War. By 1971, the world knew the U.S. no longer had the gold to back its promises. So, Richard Nixon, in the Nixon shock, did the unthinkable. He severed the final link to gold. The Jekyll Island machine was now finally unleashed. It was a pure fiat system. The cartel could now print infinitely. And what has been the result of this 100-year secret plan? Look around you. The official story is that our economy is recovering. The truth is that the Jekyll Island system is in its endgame, the 2008 financial crisis. What was it? The official story says it was a housing bubble. The truth is that it was the Jekyll Island plan working to perfection. The member banks, the cartel's banks, J.P. Morgan, Goldman Sachs, They took insane risks, knowing that their lender of last resort, their own creation, would be there to bail them out. They were too big to fail. This wasn't a bug in the system. It was the goal of the 1910 meeting. The cartel was saved. The public got the bill. Quantitative easing, QE. What is it? The official story says it's an economic stimulus tool. The truth is that it is the same debt monetization mechanism used to finance World War I, now made permanent. It is the Federal Reserve printing trillions of dollars from nothing to buy the government's unpayable debt. It is not stimulus. It is hyperinflation in slow motion. It is the deliberate destruction of your savings, the theft of your purchasing power, to finance the cartel's bankrupt system. We are now in the final stage, the endgame. The Jekyll Island system is choking on its own debt, a debt so large it can never be repaid. The cartel knows this. The architects know the system is mathematically broken. So, what is their solution? The same solution as 1907, the same solution as 1929, a controlled demolition, a great reset, the collapse we are about to see, the inflation, the supply chain crisis, the wars. This is not an accident. It is a plan. It is the harvest. It is the final wealth transfer, the final consolidation, before they offer us their solution. And what is their solution? It is the perfection of the Jekyll Island secret, a central bank digital currency, CBDC. The heist of 1913 was about centralizing the money supply. A CBDC is the final step. A dollar that is digital, programmable, and controlled directly by the cartel. A currency where they can track every single transaction you make. A currency they can freeze if you dissent. A currency they can expire if you don't spend it fast enough. The secret that began in that private rail car in 1910 was not just a plan to create a bank, it was a plan to build a cage for the entire U.S. economy. And then, for the world, 100 years later, that cage is nearly complete. The creature from Jekyll Island is about to show its true face.